Hi guys, Mrs. Kyle here. Today we are going to do 9-2 work together. Let's see. So 9-2 work together is going to be on page 271. So what we are doing here is we're talking about prepaid expenses. So for example, expenses that are paid in 1 year, but you don't use them to another are prepaid expenses. So your examples could be supplies, insurance, advertising, income tax, all that. So a portion of your cash payment for expenses that have been used in a current fiscal period has to be an expense in a different fiscal period. So for example, you initially buy your insurance and you call it an asset. So you have $5,000 worth of insurance. Well, at the end of the fiscal period, you still don't have $5,000. So you have to do an adjusting entry for that insurance because it's no longer an asset. A lot of it has turned into an expense. There's a couple different ways that you can go about it. So the first thing is supplies. If you initially record it as an asset, so you have an adjusting entry, so it's no longer an asset, so you have to put supplies expense as a debit and then credit your supplies office because it's no longer an asset. So you can record it that way, or you can initially record it as an expense, but then you may not use it all. So if you don't use it, you have to go back and do an adjusting entry to debit your supplies and credit your expenses. All right, so there's two different ways of going about it. Neither is right or wrong. I mean, they're both acceptable. You just got to make sure you do it consistently both ways. If you initially record it as an expense, you then will have to do what's called a reversing entry. Okay? You don't have to do that if you initially record it as a asset, though, just so you know. All right, so let's go ahead and do the problem. So it says Janssen Incorporated has the following general ledger balances on December 31st of the current year before it records adjusting entries. A general journal is provided. Your instructor will guide you through the following examples. Use the following adjustment information. Journalize the adjusting entries for supplies and insurance on December 31st of the current year. All right, so first thing first is in our general journal, what we're doing is adjusting entries, and we're going to do them on December 31st. December 31st. Okay, so what it says, our first one, our administrative supplies inventory on December 31st is 500. Well, we initially recorded this all as an expense of $3,200. However, we didn't use all of those supplies. We still have 500 remaining. So we have to do an adjusting entry for that because we don't want to negatively affect us when we still have these supplies on our shelves. So we have supplies administrative and then supplies expense. Because we're doing an adjusting entry because we initially debited the $3,200, credited our supplies, but we didn't use them all. We still have 500 remaining. All right, so there's our first one for supplies expense administrative. Our next is our supplies sale. Our inventory on hand, we still have $400. We initially recorded that we were going to use them all as $1,500. That did not happen. So we have to change it into an asset to go into the next fiscal period. So it's supplies expense sales. Oh, wait a minute. Up here, I'm sorry. This should be supplies administrative, supplies sales. All right, so then supplies expense, because we didn't use them all, we still have $400 remaining. Oh my goodness, 400. All right, and then our last one was our insurance. So we initially put it as an insurance expense of $2,000, but we did not use it all. So we have prepaid insurance and insurance expense, and we have $600 of our insurance remaining. Okay, so this is because our adjusting entry at the end of the fiscal period, we did not use all of this. So we have to adjust because now we have more assets than what we have accounted for. All right, because we did it this way, we have to do what's called a reversing entry for the new fiscal period. So it tells us journalize the reversing entries on January 1st of the current year. Well, the nice thing about a reversing entry, it's pretty much the same as our adjusting entry. Okay, so now we're going to use all these expenses during this fiscal period. So we got supplies expense administrative, supplies administrative. All right, so we're saying during this year, we're going to use this $500, which we probably will. So we're starting the year with this 500. So we're going to do the same for our supplies sales. So we're just doing a reversing entry, which is flopping our adjusting entry, because we're planning on using this $400 of sales supplies during this fiscal period. And same with our insurance. So we got insurance expense, prepaid insurance, $600. Again, you only have to do a reversing entry if you record it as an expense from the get-go. Most of the time we record it as an asset, so you wouldn't have to do. But it all depends on what accounting practice you use. Okay, so we're going to check our answer. Got a 14 out of 14. Perfect. So you guys are going to do 9-2 on your own, and we're going to do the applications and the mastery for Chapter 9. All right, hope all's well. Any questions, post it on Moodle. Either your classmates or I will get back to you. Talk to you soon. Bye.